Welcome everyone to the Everyday Trader. This is Greg. Good to be with you again on a pretty ugly day in the market if you're a bull, right, Eric?
Yes, sir. Interesting turn of events that we've had in the S&P 500 down 1.8%. It just seems like I'm looking at my watch list and I'm seeing lots of red across the board here. With really, we did have some significant earnings reports, and that two very big retailers provided results today. But when I read the headline of the Wall Street Journal today, as far as it's fall on interest rate concerns, and I'm glad I'm not a reporter for the Wall Street Journal. I have to explain because you know. So what is it? We don't really have a smoking gun other than there's fear that rates are going to go up, which I don't know that we have an objective measurement other than that, but I would say that is the zeitgeist that's been out there. You and I have been talking about that. I mean, especially over the past week, I've personally been very surprised that the market seemed to take in stride the really strong labor numbers, which I think are a big warning sign in terms of an indication of continued inflation. So maybe that's being digested over the weekend. I don't know. What are your thoughts?
Yeah, I think that's what it is more than anything, is that the market's finally saying, okay, maybe we should actually take the Fed for what they're saying. Let's price in maybe some more increases in interest rates. The idea of higher for longer is being priced into the market right now. And therefore, I think we got to reprice equities. And we're seeing it across the board right now, too. There's very little green on my watch list as well. Just a couple of names. One of them is one of those names you talked about, earnings. And so ironically, they're up and actually had a decent report, but I actually think it's one of their actual earnings warning for the future is I think what spooked the market a little bit. I'm specifically talking about Walmart. Walmart they beat earnings, but they guided lower, and it was a pretty significant guide lower, that they're concerned about the consumer. And it was at the same time that Home Depot also, in this case, missed on their earnings, but they also guided lower today. And so I think some fear about maybe the consumer is slowing down. If the Fed is going to be raising rates and we got a consumer slowing down, are we talking about running the risk of going back into that stagflation word? I sure hope not. That would be a really bad thing. But man, a Home Depot shareholder, I hope, understands the collar trade today, because they're just absolutely getting whacked to the downside. So
it's funny you bring up the collar trade, because when I was looking at this Walmart chart, like we talked before we kicked off the recording, the one thing that catches my eye is this 125.49, which was a market blip that happened, but unfortunately there were trades that happened at that point. And this is the reason why friends don't let friends use stop loss orders. You mentioned the collar trade, which the stop loss orders, I mean, if you it's a very crude and blunt instrument. It reminds me of when people used to use leeches to treat people back in the old days. Maybe it works, I don't know, but there's probably better ways to do it. And I think stop loss orders are just retail traders who only trade stock don't have any choice other than to use stop loss orders. But people get filled when you see stuff like this, and it's really unfortunate. That we should talk more about stop loss orders and why the collar trade is a better trade. But you mentioned that on Walmart and on Home Depot as well. We got this which it's just been uber painful, and the pain is continuing. We continue to drive down. We're way past the lower Bollinger Bands, which is you don't usually see stocks getting too far out of the Bollinger Bands here. And my guess is this is probably overstated, probably overdone. I mean, I think that you can make a case for why Home Depot. I think we're near the bottom of the housing market in terms of, I think we're closer to the bottom than we are to the top, I guess. I think, overall in homes, my daughter's looking to buy a house in the St. Louis area. There's 2 houses for sale in their zip code. So inventory is a real issue. Some of these people that own existing homes, they're going to do do-it-yourself projects. And I'm not exactly sure that the news from Home Depot was all that bad that it warrants a 6% move down in the stock.
Well, that's why I think it does come back to what we first started the conversation with. I don't know that yes, individual earnings impact stocks. I think the biggest move, what's moving the market lower today, is the idea that the Fed is going to be higher for longer with rates, and they're going to now price that in. So the question will be, at what point does the market find equilibrium? Do we need to go down to 3,900 on the S&P? Do we have to go back down to the lows that we hit in October? I don't think we have to go that far down, but I do think that the upward momentum is for now shot, and we're going to start to see more volatility. You actually are starting to see that priced into the VIX. I know the last time we talked about the 0-day options kind of destroying the VIX a little bit. Well, we are seeing a spike up in the VIX, which tells me there is more normal type of short positioning that's going on in the big market right now in institutional money. And so, I know you had mentioned this in our OA Weekly that we did last Friday.
The OA, you mean Options Animal Week?
Options Animal Weekly.
Which is for our members of Options Animal. We do a
right.
weekly talk about the markets and what's coming up.
Yeah, you had mentioned that, we had one of the biggest short covering scenarios since the great financial crisis. And
the short coverings by institutions, hedge funds, and we can see that data because it's public through 13F filings. And it was the biggest short covering that had existed since the global financial crisis, and probably explained a good portion of why we saw, this rally that's happened the beginning of the year, at least in part.
So I guess in the short term, I'm back in the bear camp again for the foreseeable. 30, maybe 3,800, 380 on the SPY. If we can get down there and hold that level, that's optimistic, I think, don't you?
I still, you and me, I'm a perma bull. So I don't know. I don't think we're going to get down that low. I think we'll probably get a bounce off the Bollinger Bands. I think it's probably an opportunity here, maybe to take a contrarian view. These sentimental moves, they tend to swipe a lot of the air out of the room and affect the mood of the market. But sometimes they're sentimental. When I look at this heat map tool and see everything across the board red, and it makes you wonder, what was the smoking gun? What was the leading cause of this? And there's algorithmic trading, which is everybody puts it on the bots or feelings or emotion. If we had seen something happen from, I think you nailed it. I think this is related to the Fed watch. And by the way, my estimate, I will take $100 bet with anybody that March 22nd we have a 50-point basis hike, and that's we're 24% probability. I know you got to take these with a grain of salt here, these numbers, especially when we get onto these later dates. But the market is moving closer to this 50 basis point. And I feel strongly that based on the very strong labor that we've seen, by the way, that was one of the highlights in Walmart, is dramatic increase in compensation. I'm surprised Walmart didn't take more of a chin, because take it more on the chin, because that does affect margins. But we're seeing and we're hearing from earnings calls that there's pressure on labor and wages, which has to be passed along ultimately, or it's going to come out of margins. And that's not what we're seeing. Actually, what we're seeing is volumes down overall. If you look at any of the companies that produce products, is we're seeing margins up, revenues up, and volumes down. So they're raising prices on things. So inflation is happening. It's happening in goods through normally just smaller cans. If you notice, your bag of Fritos is a little smaller.
Shrinkflation.
What's shrinkflation? What's happening?
Shrinkflation, yeah.
Right. And wages, I think, is not given the credit of that. And you and I know from, I don't know if we shared this on the Everyday Trader, but we had an opportunity to speak to a couple of Federal Reserve members, and I mentioned on Friday, looking at Waller in the eyes and asking him his concern about wages, and him, I could see the emotion in his face that the Fed is very concerned about wages. Yeah. And I don't think the market is talking. I mean, we're talking about it, but I don't think we're giving it the credit it deserves. And I think we're going to see this probably skew a little bit higher. So I'd bet $100. I know you're a betting man. You probably won't take that bet with me though.
I'm not, because I agree with you. My odds it would be wrong. I agree with you. So
yeah, I think we're going to go 50 basis points this next one, and I think that's going to shock a lot of people. And you're right. If that's what's being digested in the market right now, it's the Wall Street Journal right now. The stocks fall on interest rate concerns. So it's hard to see what the smoking gun is for that. Maybe it's just this and sort of the mood, because there hasn't been any really economic information or anything that's come out that would, no Fed speakers yet. We got a lot of Fed speakers coming up this week. And so I think that's something to keep an eye on here.
Sure.
I don't know. Back to Home Depot, my feeling is that this is overdone. And if we look at the times that it's gone out of the Bollinger Bands, it tends to come right back in. So my feeling is that this might be an opportunity to take a contrarian play, maybe place a little bit of a bullish trade, limited risk. Not that I would buy calls, but I think maybe something in a put spread or a diagonal trade or something that's interesting. Which brings us, unless you have more comments on this,
Nope.
to something that we're talking about ahead of time here, is wondering what you as a listener are getting out of this. We're getting really good feedback from people. Our numbers are growing. We appreciate it. Appreciate you liking and subscribing and sharing and all that other stuff. But the question I had for you, or Greg, what's the question we have?
Well, the question is, what do you want to see? I mean, what you have seen that we've talked about so far, we've talked about a lot of things. We talk about day-to-day earnings type stuff. We talk about strategies. We talk about big picture macro ideas. What is it that you want to see us talk about? One of the things that Eric and I shared about wanting to start this is just, we're like you. We trade. We're home traders. We want to share our expertise that we've gained over the last 25 years doing this. And so what is it you want to learn? And again, we'll talk about whatever you guys want to talk about baseball. We'll talk about baseball.
But is it the macro big picture stuff? Is it the feedback on what we think the Fed's going to do? Is it, review of individual equities? Is it, understanding strategies? Like we did, one of our more popular ones is the misunderstood covered call. A lot of people are referring back to that. Or trade ideas. I don't know. I think everybody wants trade ideas, but I don't know that that's, it's really timely. But certainly we do share those with our community and other forums as well. But I'm really interested in knowing from our listeners, and we try to figure out what the right way to do is. Should we do a survey? But you know what? The easiest way for us to do this is for you to type in the comments down below. Like to see more of XYZ, or, you're doing a good job with this, or you can do a better job with that. And anything we can do to make this better for you guys, that's what we want to try and do.
Okay. We'll wrap it up. Thanks, folks. Eric's been a pleasure.
Everybody. Awesome. Thanks, Greg. I'll talk to you later.
Okay. Yeah.
See ya.